Hey guys, what's going on? So today is January 6th. I'm doing a review of the 13 market moves sequence for the week of January 2nd through January 5th. And guys, this sequence is extremely rare. This is actually a photo of last review that we have done, which basically we have evolved from a move 11 to a move 9 to a move 11. And so I had a bunch of guys who have not taken the 13 market moves course. They were asking me like, Leo, what's the difference between an 11 and a 3? Because it looks like they're the same moves, but they're not, right? So 11 and the 3. In a 3 move, basically you're gonna gap down. Let me change the color here to a red. You're gonna gap down, and then you're gonna have a pattern that's gonna look like just a consistent downward spiral. In a move 11, there's 3 variations of a move 11, which we don't have time to cover in this video, but just for a general, to contribute to general ability to distinguish the 3 from an 11. So in this case, we had a gap down on a Tuesday, and then the market drops, makes a pyramid and goes back up, right? So that's been the predominant move, okay? Before this year started, I told you your best moves to trade this year are gonna be 2, 11, and 3. If you understand and learn how to trade these 3 moves, you're gonna make more money than you've ever made in your entire career fucking trading. You're gonna make it now in 2024, that's a fact. But you gotta understand it, okay? Because this is what's gonna help you gain the confidence how you trade every day. This is what's gonna help you identify what are some of your best time frames of the day. Because, I mean, at times, yeah, sure, you wanna just get in and you wanna hold forever. But if you have a good solid day trading account, or if you're trading futures, options and futures, guys, as we suggest you do here at 13 Market Moves, that's what's gonna get your account the most traction. I mean, you want to be taking advantage of certain time frames. So what is the summary of this week's time frames? Well, if you study the move 11, this pyramid formation, okay, it's going to top out, like this top normally is going to be between the hours of about 11:30 in the morning and 1 o'clock. So your entry on the short side would be between 11 and 1. So you would be shorting the bounce between 11 and 1, which would be totally different. Like in a move 2, you would be shorting the bounce way earlier. So it's a different type of move. But the pyramid, okay, this pyramid pattern has been existent throughout the entire trading week. So again, this is the last snapshot I have reviewed with you guys. Now, since then, okay, the sequence gets even more bearish. So this is now what we've got actually officially for the week of January 2nd for January 5th. And so this is this was your Tuesday, right? That started out as a bearish move, 3 looking pattern, but then really we didn't drop. So in a lot of move 3s, your daily trading range is going to be much greater. So in the move 11, what we've been doing, right, basically we've been going higher 20-30 points, dropping 20-30 points, okay, and this has been the pattern for 3 days, right? With the exception, I've explained in the last video why Wednesday was a move 9. You can go ahead and review that. The focus of this video is to show you that this pattern, guys, this pyramid pattern, which is known in 13 market moves as a move 11, has been predominant for the entire week. And if you know anything about a move 11, it is a topping formation. Now, just because it is a topping formation, the first time you get a move 11 does not necessarily mean the market is going to crash the next day. But when you have such an overwhelming number of move 11s, combined with a move 9, guys, this gives you a solid probability of a further drop, because guess what happens Friday, okay? As we pointed out in the last video, I recorded the video, I said this could be the last bounce because some people could be taking the job number which was actually really good. It beat all the expectations. They can take the great job number and say, hey, everything is fine with the economy, with the exception that it contradicts the Federal Reserve statement that it issued in the last two meetings, basically saying, hey, we're going to lower the rates. Okay, well, you would lower the rates if all these job numbers begin to fall off, not if they're actually accelerating or not if they're beating estimates. So basically the Fed is in a checkmate. I have talked about it in the video I posted about stagflation, which is our base case for 2024. But what happens on a Friday is we get a pyramid. First we get this dip at 8:30, so this is not the market open, but the job data has tentatively like what you would expect a kind of reaction. But you know what we do here, if you listen to multiple of my videos, you bet against the initial reaction. So on the job data, when the market drops, on the job report, what do? This is the initial reaction. What do? You trade against the direction of the initial reaction. That's what a trader, a successful trader does. Now, I don't know many traders that trade in the direction of the initial reaction. Sometimes you could get lucky doing that, but guys, that's not how you make big money in the market. So remember, if anything, from this video, besides this highly bearish sequence that spells disaster for the market, at some point next week, I would say there's 100% probability of a market dropping off, and it can happen as early as Monday. I would dare to say that. So you got a top information with major reversal in the reaction to when the Federal Reserve says something about the market. Initially, you get a reaction higher in this case, followed by a sell-off on a Wednesday. Not like a grand sell-off, but the key here on this move 9 is a shift in the reaction. And I mentioned in the last video, this could be a predecessor to a Monday, which we haven't dropped on a Monday in forever, that we can actually get a straight down day on a Monday, a solid straight drop on a Monday. So we basically have shifted, guys, from the last time I posted a video. We were in a sequence 11, 9, 11, and now we are in 11, 9, 11, 11. And if you were to zoom in a little closer on the action on Friday, so we bounce, same time frame, right? When we're talking about what are your best entries and exits. If you're part of the member group in the paying members alerts, guys, you would have gotten the message to short S&P when it was going to hit 47.52, and you would have gotten that message like 2 hours, 3 hours before we actually got there. So we sent that message like over here. So we expected the market to bounce. I've talked about in the video I posted prior to the job report saying, look, this could be the last bounce before the market actually meaningfully drops off. So another confirmation of the market top. Within this move 11, you actually get one pyramid, and then following through on that, you get another pyramid later in the day. So guys, we have multiple, every day there is a confirmation of what, based off the 13 market moves, the patterns we interpret as a top. So we have one top signal, two top signal, three top signal, and we have two top signals just on Friday alone. Not to mention that on the last day of on the last day of 2023, we had a move too. So I posted a bunch of videos around this time frame, around New Year's Day, pointing out that you're going to have a lot of red moves. And so far we had nothing but red moves. And the only thing that we have not had yet is the move expansion, right? And if you study this part right here, guys, the market shoots from here. It hits a low of 47.02 on the strong job number, and look by how much it goes higher. Guys, I'm telling you, the way you beat the market, your lucky number is number 60. It doesn't get better than this. The market precisely goes after a knee-jerk reaction lower after the job report. It goes higher by how much? Oh my God, you can't, seriously, or fuck, it's 70, 47, 60. This is where you are. So basically 60 points higher, okay? I'm telling you, this market is programmed by machines. I've spent a whole video, okay, showing you my theory about how this market that cannot drop by more than 60 points for a year, it's about to come to an end. And so it could have happened Friday. I thought that Friday we had a strong catalyst. Normally, guys, considering the conditions that everybody's been brainwashed by the Fed that they're going to lower rates, we have Fed minutes right here, okay, where the market, where we actually get a move 9 for the first time in 12 months, which shows us a shift in the reaction to when Federal Reserve delivers any kind of message. So for the first time, people are starting to question the Fed, saying, well, hold on, we expected this definite number of rate cuts going into 2024, but now you're saying you're not so sure, number one, when you're gonna lower the rates, and number two, it sounds like you're not even sure of when it would be appropriate to lower the rates at all. So after some good data on Thursday and Friday, okay, now the market should really question, like it did initially on the reaction lower on a Friday to a level of 47.02 on the S&P futures. But instead, the market caught its equilibrium and went higher. But guys, you cannot, okay, you cannot beat this market on the bull side right now. There's no way, okay? So your goal as a trader, the way you make money is you catch these bounces in a move 11. Every time I'm recording this video, guys, I'm trying to give you some useful information. So in a move 11, if you want to write it down somewhere, okay, it's the time frame. When do you short a move 11? Between 11 and 1 in the intraday session. So forget about all the stuff you've learned anywhere else, guys. If you come to 13 market moves, you're going to learn how to do things here in a completely different way from what you might have learned it anywhere else. So anywhere else, you might have been taught, well, trade the open, trade the open. This is where you're going to make the most money. That's a bunch of crap. You trade the open, I mean, man, you can lose a lot of money by trading the open because option pricing is going to change very rapidly if you get the direction wrong. If you get the timing wrong, especially, you know, 5-10 minutes from the open could make a ton of difference, depending on your position size, of course, and depending on the expirations that you trade. But guys, this right here, okay, you would have been much better off paying attention to the pattern of a move of 11 and shorten the market on bounce between 11 in the morning and 1 p.m. So this has been the case throughout the entire week. And don't necessarily expect this anymore next week, okay? I'm going to tell you the highest probability for, if we don't open Monday, which I think the highest probability on the Monday, I would say there's a 90% probability that we're going to gap down. When you come in Monday into the markets, you're going to open your trading computer and the market is going to be no longer, or we close it like 47.35 on the S&P futures, probably going to gap down. We're going to be sitting at 4,700 on Monday in the morning when you're going to open your computer at, let's say, 6, 7, 8, 9 o'clock in the morning, when you're going to be ready to trade Monday, okay, which, what is Monday going to be? The 9th? Monday the 9th, January the 9th, okay, the market's going to be down, or it's the 8th, January the 8th, right? Monday, January the 8th, the market's already going to be down. And so you may be wondering, well, Leo, I don't want to miss out on this chance. Many people don't realize that here at 13 Market Moves, our trading day does not start on a fucking Monday. We start trading on Sunday night, 6 p.m., okay? And most of you that trade futures like Leo, how do you start your day at 6 p.m. on a Sunday night? The markets are closed. No, the markets are closed only for fucking tourists on Sunday nights, okay? The market, the futures start trading at 6 p.m. in the United States because guess what? The whole the rest of the world is already awake. There's stuff happening all over the world. Okay, by the time it's 6 p.m. in the United States Eastern, there's a whole lot of shit that already happened all over the world. So the futures start running at 6 p.m. And for those of you that didn't know that trade options, you can actually trade options on futures. So the best way for you to capture some of these gap downs is not when the market opens, right? So the easiest trade we've had is we went short ahead of the job report, because I have voiced my opinion saying, like, look, based on the data we've gotten here on Thursday, we're going to have a strong job number. So we got a strong job number. Strong job number means the market should have really went lower. So we caught this sharp drop. It was a sharp drop in S&P 500 futures, sharp drop in NASDAQ futures. I mean, stuff which is, for like a few minutes, shit was just collapsing. So that was the easiest trade you could have taken, right? You didn't have to wait for it forever and ever. If you were there, you got paid, okay? So the same thing could be the instance on Sunday night, tomorrow at 6 p.m. It's going to be January 7th, 6 p.m. The futures markets are going to be running. We're going to be trading with options. I invite you guys to trade it with us. Because the sequence, like when you get a solid sequence like this, 11, 9, 11, and the market is still holding on and gives you another 11, but it sends you double signal with another 11. There's two pyramids within that Friday move. Guys, this show is over. I mean, this market is cooked. There's nothing they can do. I only think there's only one thing that can save this fucking market from collapsing on Monday, and that is Bitcoin ETF approval, which I have my own theory on this. So I think it's, guys, I don't think Bitcoin ETF has got a chance of being approved at this time. And guys, I'm an optimistic person, but I will record a separate video on this, okay? Because there's multiple signs within the charts. As a matter of fact, I'll just do this. In the next video, me and you guys, we're gonna glance at least 20 charts. Let's do 21 charts. We're gonna look at 21 charts in the next video, okay? So you could see why, based off the charts, Bitcoin ETF is not gonna be approved. So I want you to get ready for this phenomenal opportunity. The market's gonna be highly volatile, and 2, 11, 9, 11, 11, guys, this is a very rare sequence. This is the kind of sequence you get like maybe once a year. So be ready for some phenomenal, drastic moves in the market that begins January 8th. I would say there's a 100% probability of the market finishing way lower than where it finished this week by Friday next week. Some of the biggest moves could actually come in Thursday, Friday. So if by a miracle, the machines are able to sustain this 60 daily move pattern that's been going on for 12 months now. If it is by miracle, let's say there's 10% chance of that, it's going to be sustainable for like 3 more days. By the time we're all into next Thursday, it's over. Thursday, Friday, I'm expecting next Thursday and Friday to be some of the biggest down days we have seen in probably last year and a half, last 2 years. So get ready. Okay, guys. So as far as helping you understand a move 11, okay, there's 3 variations of a move 11. So when it comes to 13 market moves, okay, the number one thing you want to focus is the pattern of how the market is evolving in the intraday session. So these moves are basically measured in relation to where the market closed yesterday, in relation to where the market closes today. And so there's 3 variations, because sometimes the market could be positive. Like this whole thing could actually be in the green. Like in other words, the market could open a few points, go slightly lower. It may never go negative. Basically, if this is the line of basically a 0.0 where the market closed yesterday, so we could be up, let's say 10 points, go down 5 points, go up 30 points, drop 30 points, and go up maybe a couple of points. So overall, the market doesn't do a whole lot. And overall, the market is still positive. So for some inexperienced traders that are looking at this, and they're looking by the end of the day, if you're simply looking at whether the index finished higher, lower, whoa, we finished higher today. Yeah, we only finished a few points higher, but it doesn't matter. Okay, the pattern is there, but you want to look at not just where the market opened and closed, but what has transpired throughout the day. It's the behavior of the market that matters. So basically, when we're talking about a move 11, it's the pyramid formation. Even though the market could be all day in the green, it is actually considered a red move because the behavior of the market spells out that this is not a bullish move, that the next move coming is most likely to be some type of red move in the 13 market moves formula. So basically all of these are variations of move 11. Now this one is basically when the market could gap down, it could shoot back up in the positive territory, stay positive for some time, but by the end of the day it pretty much reverses, loses all the gains that it had throughout the day. And in this case, the market gaps down, it never goes into the green area, it stays red all day. This was like June 2nd, right? June 2nd was a move 11. We gap down, the market bounces, it never goes into the positive territory. We gap down like, let's say 30 points. So 30 points was like this level right here. We bounce, maybe even like 20 points, but we never go positive that day. We reverse, we go lower, and towards the end of the day, we got a little bounce here, but overall, we're still finishing like, what, close, minus 25, 30 points for the day. So it's clearly, in this case, it should be easy to understand that this is a red move. In this case, it should be easy to understand this is a red move. In this case, the market is positive. All three indexes could be positive, but we already know this is the red move. So pay attention to the pattern. And second thing, what you learned today about a move 11 is that the time frame where you short this move is right here, okay? And normally this stop is going to coincide between the hours of 11 in the morning, or a lot of times closer to like lunchtime, right? Closer to like lunchtime. People going to run the market towards lunchtime in hopes that, hey, maybe somebody will still buy the dip, maybe there's no shift, maybe everything's fine. And lunchtime goes by, and especially after lunchtime, shit, if this doesn't go higher, right, people realize, well, shit, maybe I'm the only one buying. Fuck, maybe I should unload because it doesn't go higher. And then more sellers come in and basically return where you started the day. So it's a move 11, guys. It's a fucking top. Okay, so let's just review then what happened so far from December 29th up to January 5th in numerical terms. So first, last year on the last day of trading, we have a move 2, which is a signal that, hey, people are starting to get out. We're going to the first day of the year. The first day of the year is a move 11, which, guys, people are getting out. When the Fed reviews the minutes, things are inconsistent with what everyone expects. We're getting a move 9. The next day, people are getting out. Friday, when the bounce happens, people are getting out, and you get 2 miniature move 11s. Okay, so basically you have sign of a top, reshift in the market on when Federal Reserve announces any kind of news, top. Guys, what follows next is a fucking drop. Okay, so this is how you take a sequence of market patterns and you basically put these things together along with some of the other things we teach you in charts, divergences, and pattern recognition course, and you go in observing this sequence, okay, saying, look, I'm going to catch the bounce. If it happens Monday, I'm going to short the bounce, but chances are it's going to be a straight shot down. And the way you can beat that, if tomorrow, Sunday, okay, you guys come and trade with us at 6 p.m. So here's your invitation to come trade with 13 Market Moves 6 p.m. Sunday, damn right, yes, markets open Sunday for 13 Market Moves, not Monday. Most of the traders are going to wake up Monday and realize, oh shit, the market's already down by so much, and that's when they're going to try to get in. By the time we're already up, like multiple X. So the highest probability outcome for Monday, guys, is a move 3 based off this sequence, okay? 11-3. So top, 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 drop. So again, the only thing that can save the market is a ETF approval on Bitcoin. That's highly unlikely. So 3, we can get a repetition of a 2. There's a slight probability we can get another 11. Okay, and another red move in a 13 market moves formula is a move 6. Okay, it's highly doubtful after the number of 11s we've got. But if the move 6 happens, I'm going to give you a specific description of it. So focus on the red moves because the probability of the red move is likely. But what's more notable is the probability of us breaching the levels at which machines of the market have been programmed for the last 12 months, that number 60, okay? The moment we close the day next week lower than 60 points for the day, okay, that signifies the market could be collapsing in a big kind of way. So I've been giving you a lot of warning signs since the last few days of last year and the whole year in 2024 so far. Basically, guys, I don't want you to miss it. This is gonna, like, this is the kind of momentum that we could shift the market. I've told you about the VIX going potentially all the way up to, I mean, the VIX is at 14 right now. It's gotten at one point it got dangerously close to an area which I consider the danger zone of any market crash, where this numerical value of 14.8 could rather rapidly escalate to a level of 20, okay, 20, and from there, I mean, it could escalate to 35, and before you know it could be 2018 and we could be at 55. Guys, it's like 35, then another leg higher to 55. This is a very, very dangerous zone for the market, and we've nailed every top and bottom here at 13 Market Moves besides this artificial bottom in November of 2023, okay? And so we missed that. Yes, I agree. We've got some beautiful individual trades on futures, but we missed the run-up in S&P 500. We missed the run-up in NASDAQ futures. We've had some great individual trades, but as far as the general direction of the market, you guys should know that we missed the last 2 months. And at the same time, despite this artificial bounce, okay, I trust the sequence. Okay, we have not had a sequence this powerful in quite some time. So I'm going to stay with what I know best. And the guys that I'm trained with, we're going to stick with this. Okay, because this has worked multiple times. I'm 100% sure this is going to work this time. So this is our strategy we use here at 13 Market Moves. Guys, if you want to learn more about it, I'm posting this, guys. Yeah, clearly, I'm posting this on Saturday. All the markets are closed. I'm posting this way before next week market is going to open. I invite you to trade it with us because I see the outcome, and I'm going to trade it with 100% confidence. In my view, the series of red moves are going to continue with 3, 2, and 11. Highest probability moves for next week again. And if there's going to be like an oddball move next week, like a move 7, oh my God, we're so going to take advantage of that. Whoo, guys. That's actually a green move. Move 7 is a green move. This is the bullish move that traps a lot of short sellers. But oh boy, if a 7 happens, oh my God, we're going to kill it next week, guys. I hope that a 7 is going to happen at one point, like midweek. Like sometimes the market would do this, right? They'll drop, and then this is where everyone's been listening to 13 Market Moves now. They're like, oh, fuck yeah, Leo's right. Oh, my God, let me short it right here. And sure enough, they short it the next fucking day. Market bounces like fucking crazy. They're like, God damn, Leo, I fuck. Yeah, well, I told you for 7 days now to short the market. You've been sitting watching everything, so it's not my fault. Once the shit really is going to be dropping, that's when you decide to get in. Fuck no. That's not a way to make the money as a trader. So watch this. The day everyone gets in, sure enough, the market's going to fucking bounce. Okay, and that's when we're going to put the biggest fucking position on shorts right here, guys. And then the market's going to make another leg lower all the way, and this is when VIX is going to go all the way up. So this is about to happen, guys. I've done it so many fucking times. I know it. I just want you to be a part of it. I want you to experience the power of 13 market moves. I want you to understand how to arrive at these sequences. I want you to trade with market with 100% confidence, just like I do it fucking every day. And like a lot of our students that have made a bunch of money with 13 market moves over the last few years. So maybe you've listened to 13 market moves, you gotten some bullshit like this here that I just described. Don't let that be an obstacle to you conquering the markets in 2024. Let's fucking roll. This week is going to be huge. January 8th through, I would say, January 30th. Those 20 some days are going to be phenomenal trading opportunities. Mine is going to be highly volatile, guys. Be a part of it. This is the time to make some serious money. Join 13 Market Moves today by going to 13mmtv.com or 13marketmoves.com. I hope this review of the 13 Market Moves was helpful. And if you still have any questions regarding this material that we covered today, don't hesitate to schedule a call. Talk to a coach if you have any questions remaining about what was just described. Let's rock, guys. I'll catch you in the next video soon.
Trading wins and losses is just like everything else in life that is worth fighting for. You remember your marriage? Man, it was beautiful when you were getting married, but you had no idea how ugly the losses of this divorce were actually going to be. Like opening a business, thinking you'd get rich overnight. But in the midst of it, you ended up maxing all of your credit cards just to sustain that business for a few years before you even realize a tiny bit of your first profits. Like buying a house, thinking it would go up in value forever and ever, just realizing how wrong you actually were when 2008 hit. Like having kids, it was such a great idea at first. Remember how excited you were, terrified and scared at the same time, how much joy you actually had. Until your kids turned 2. Man, the terrible 2s. You thought that was bad until they turned 13, 14, 15. Shit. But you wouldn't change it for anything. You love your kids, no matter what your emotional losses or wins are with them, no matter what your financial losses or wins are. It really doesn't matter, does it? You don't quit on your kids, no matter how tough things actually get. For some of us, it's the same thing with trading. Just think, how long are your kids going to be your kids? The answer is forever. How long do you see yourself trading the markets? If your answer is forever, then you owe it to yourself and your kids to invest in the 13 Market Moves formula, so that your life journey of trading would be most rewarding and joyful, both financially and emotionally. Live to trade, trade to live. Conquer the world one trade at a time. fearlessly using the 13 market moves formula today.